Are you feeling overwhelmed by all the fancy indicators on your chart? Well, listen up, because you don't need all that complicated stuff to make money in Forex trading. In this video, I'm going to show you how to trade in a way that's simple and easy to understand. We're going to take a look at 3 different pairs. No more stress or confusion, just clear, confident, and profitable trades. So stop looking at those complicated charts and let me show you how to simplify your trading. If you're new to Forex trading, you know how confusing it can be to analyze the charts and make sense of the indicators available to you. What if I told you that you can trade successfully without using any indicators at all? Trading with a simple approach can be just as effective, if not more so, than using some of those complicated methods out there. Let's take a look at the charts and see how we can identify an opportunity. You can see we're on USD JPY 4-hour chart. This is where we're going to be looking for our setups, and we're going to be taking entry on the 5-minute chart. So when we see this, of course it's easy to do this up because price has already happened, but the more that you see this, the better that you'll become at it. Now, I'm also going to discuss something that I'm planning to do near the end of the video, so stick around for that. When you're looking at this, what I want to show you is we're watching for the 4-hour candle to react to a voided area, also testing previous structure. So I'm looking for a combination of the two. This is how I identify the area. Now, I know some other people talk about similarities, asking me if this is fair value gaps. To be honest, I couldn't tell you. And I would recommend, if you're comparing it with that, you may want to consider following that direction instead. It may be more comprehensive. But for this, I try to keep it as simple as possible. And we're just trying to identify an area where price is left and it hasn't come back to fill that area. And I'm also looking for structure around that area at the same time. And when price comes into that area, I'm considering it a trading opportunity depending on how it reacts. So when we look at this, you can see that price here, just move this out of the way. You can see how the candle came down, tested this voided area here. It's not until price is closed. So once the candle is closed, it's only then I'm looking for a trading opportunity. I'm not interested until the candle is shown its hand. So the candle is closed. You can see that it came in, tested the area, respected it, closed above. Now this other, you can see there's 2 blue lines here on the chart. The other line is just to represent the 4-hour time frame. So we're not looking for any opportunities until after that candle is closed. So when we drop down to the 5-minute chart, you can see here what I want to show you is we're looking for the same type of thing. So how price, what happened was price changed direction and came back and retested that area, that voided area, testing structure, and then changing direction at that point after retesting it. So we're doing the same thing when we drop down to the 5-minute. We identified that on the 4-hour. Now we're looking at the 5-minute. And you can see this area here, we've got marked off, this voided area. And price changed direction. You can see that everything was going down. Structure changed, went to the upside, and then came down and retested this area here. Now there's a couple ways that you could get in on the trade. You could set an entry for when it touches, or you could wait for the candle to close for a stronger confirmation. And at that point, if you did that, and you're just going to put your stop loss just below the low here and target the high. I always aim for the body, not the wick. And you can see with this example here that there's a 3.48. Now, okay, so what we're looking at is GBP USD. Price comes up into this area, tests this area. You can see an area where price wasn't touching it at all. Price comes up, filling in this area, testing this area of structure, not closing above it, closes right there. Now, price could have continued. We don't know if it will, but we're trying to make an educated guess on the direction that it's going to travel. So now we have a bias that price is going to go down. So we drop down to the 5-minute chart, and we're going to take a look and see if there's an opportunity. And when you're looking at this, what do you see? So this is the 4-hour window with those two lines. Price has changed direction. We see a voided area created. Price comes back into that area. And at that point, you have to decide where you want your entry to be. If you wait for the candle to close, and then you put your stop loss just above, and your take profit right at the low. You could see this was a risk to reward, 1.85, played out really quickly. We'll take a look at this last one here. It's the same thing. We're just looking to identify where price has changed direction, and if it's left some type of opportunity where price may come back in and retest that area, we want to get in on the trade if it presents another opportunity on the 5-minute chart. So when we're looking at this, you can see again, see how price went up, continuing to move slightly up, going sideways a bit, and then changes direction, goes down, leaving this voided area. And you can see how price came up to that area, retesting it, this previous area structure along here, coming into the voided area, closing below. And at that point, you want to drop down to the 5-minute chart, and you're looking for an opportunity. But you're not looking for the opportunity until after the candle's closed. And when you're looking at this, what do you see? So you can see how price was going up, changed direction. Now it's showing its intention to travel to the downside. What you're looking for is a voided area around structure. And you can see right here, there's an opportunity right there. And sure enough, price comes into it. Now this isn't always going to work. So it's important to follow your plan and stick to it long term and see if it works for you. Now when you see this, you can see this one bullish candle came up, tested the area, coming into structure, respecting it, closing below. And when this happened, this could have been an opportunity to get in on the trade. So stop loss just above, you could put it here. It really depends on what your target is now. So you can see the low is down here. If you aim for the low here, it's across. This was a risk to reward 7.44, 6 hours and 50 minutes. So keep that in mind too. It's going to take a while for some of them to play out. So that's sometimes it might be important to have a decent sized stop loss. That's why I'm giving it a little more distance. You can make it tighter if you want. You may get stopped out more, but thoroughly backtest it. But you can see how simple we're setting these trades up. We're just looking for obvious areas where there's an area where price hasn't come back to retest that area, hasn't come back to fill the area. And when it chooses to, and if it respects the area on the 4-hour time frame, then you're looking for an opportunity on the 5-minute after the 4-hour candle is closed. And you could just do this setup. You could look for this across several pairs and only take the best setups. Make sure you're considering news before getting in on the trade, or if it's near the end of the day. Now these 3 pairs, they were at all different times. The entry with CAD JPY was at 1:40 a.m. Eastern Standard Time. USD JPY was at 14:25, and GBP USD was at 2:45. So this can happen at all different times, different days, different times. There was also something I wanted to mention to you that I told you at the beginning of the video. And this is where I'm going to go through all the pairs once a week with this type of setup and show you the potential trading opportunities. I just want to take a moment to say thank you to each and every one of you. And until next time, bye for now.